Welcome back to another video, traders, and if you're new to the channel, welcome to Charting Trends for Trading Options. I'm TJ. Today we're doing a recap video. We're going to go back over some of the stocks that I talked about this week and earlier this month, see how they're doing. But before we get into that, please make sure you like this video and subscribe so you don't miss the next one. If you guys want to follow me on social media, those links are below in the description as well. And please, let me know what you guys think about this video in the comments section. And let's get into it. Here's the chart for Exxon Mobil, ticker symbol XOM. We're on a 4-hour, 180-day chart here. And the keys for me are the break of this downtrend from the high in June, around 56, was broken November-ish, and we've been holding this uptrend ever since then. You know, it's a little bit volatile, but you know, it's pretty stark contrast. I mean, you can clearly see downtrend, uptrend, and now we're starting to get in back to some levels here. So this first level, which we actually broke through today on a pretty decent gain, up a couple of points, which is a decent move for a company as big as Exxon is, breaking this 54 level. Now we're going to zoom out a little bit because it's been a while since we've been above this level. So as you can see, when the pandemic hit, Exxon just fell off a cliff here from 70 straight through this 54 level all the way down to 30. Recovered actually pretty quickly, you know, up through June to 54, and then again just back down. And I think this was, you know, essentially the coronavirus initial recovery. People thought, wow, this thing wasn't so bad, especially for the markets. And then this second downtrend was really the rise of EVs and alternative energy that we saw in the second half of last year. It was really hard on gas companies, and obviously Exxon Mobil is one of the biggest oil and gas companies in the world, so that certainly hurt them. But the thing I want to mention on this chart is this level up here. This is really our next level above 54. It's around 70. And we also have this larger downtrend that's pretty far away. We don't have to worry about that right now. This is on a 5-year chart. This is a long-term downtrend, obviously, and we're still a ways away from that level. But the point being that when we break 54 and confirm above it, there's a lot of upside here to this next resistance. So keep that in mind. The big reason, I mean, all right, so why are we talking about a gas company when EVs are all the rage right now? And, you know, obviously the world has made a fundamental psychological shift from, you know, being dependent on fossil fuels to recognizing that these other forms of energy can and will be the future in a much shorter time frame than we realized. And there's two reasons for it. The first is we're having a real recovery right now. This is the first time, you know, I read a lot of world news every single day, and up until recently, I hadn't seen anything optimistic related to the coronavirus. And now, really, this past week, I've started to see numbers coming in from health officials across the world talking about positivity, the chance to, I mean, numbers are dropping faster than predicted. Vaccines haven't even really gotten out there as much as we would hope they have, and yet we're starting to see numbers dropping, which means that there are unmeasurables that are affecting herd immunity, and estimates are dropping. You know, Fauci had been talking about a year, 8 months or longer before we really start to see a return to normalcy, and now that timeline has been moved up to June in some estimates. It could even be sooner. So that means the travel economy, the global tourism industry, all these things that have essentially been dead for more than a year at this point are coming back and starting to recover. And that optimism, it affects oil and gas massively, because without those industries running, your buyers, they're non-existent. Cruise ships that aren't running, they don't need gas. Planes that aren't flying, they don't need gas, etc., etc. And the second reason is the transition. There's going to be a major transition from the old way of dependence on fossil fuels to the future of, renewable electric energy through solar cars or electric vehicles, solar power and wind power, and obviously batteries are a huge part of that. But in order to get there, we need to spend about $16 trillion, and that's just in the US alone. And what that $16 trillion is going to go towards is creating the infrastructure and the support systems necessary to sustain and build out alternative energy future. Okay, so in order to build those things, the bulldozers, the dump trucks, and the concrete trucks, everything else that the construction industry and the infrastructure manufacturers rely on, they're powered by oil and gas and steel, and all these things that oil producers sell. So commodities are on the rise, oil being chief among them, just because it was so beaten down, number one, and number two, because people are anticipating this necessary transition and the investment that's going to need to take place in order for that to happen, and oil is going to play a huge part in that. And I've seen article after article talking about this year and mainly next year, 2022, oil prices being huge because supply is going down, and the demand second half of this year and going into next year is going to skyrocket because of the need to do all this construction to facilitate that transition to alternative forms of energy. So if you're wondering why we're seeing this, there's a little bit of fundamentals that I don't usually give on this channel, but we don't care about that. All we care about is price action. So what we're looking at here is an uptrend coming into a point of resistance. We hit today. I'm expecting to see a rejection, but when we revisit and confirm above this price point, just remember that the next resistance is all the way up at 70. So there's a lot of room to the upside for Exxon. They've been around for a while. They're not going anywhere anytime soon. Oh yeah, one last thing I wanted to mention on this chart, because it's just interesting. The last earnings report, which came out earlier this month, February 2nd, was probably the worst one they've ever had. Negative 470 per share. And what was the market's response? They bought it up. All right, so what does that tell you? Smart people that follow commodities, that follow oil and gas prices, they know something that we don't. So be ready. Thanks for watching, guys. I hope you enjoyed the video. If you did, please leave a like. It really helps out the channel. Make sure you subscribe so you don't miss the next one. And if you like my analysis, check out my second channel, Charting Trends for Tesla, where I do Tesla analysis daily. And please let me know what you guys think about this video below in the comments, all right? I really appreciate your feedback. Any questions, I'll definitely answer you. If you want to request a stock for me to do a video on, I'll definitely do it. All right, thanks guys. Have a great night.